Hello and welcome to this week's report. Kevin Brogan from CoreLogic will join me in just a moment, as well as having a look at the final auction results for the week and also what's ahead for the coming week. We're going to dig deep into a number of the indicators or trends that came out in a report yesterday from CoreLogic. Kevin Brogan back with me in just a moment.
Outsourcing will dramatically improve your productivity and profitability. Sure Agents have created a staffing solution to provide great staff who can perform duties in property management, sales, marketing and administration, and at a fraction of the cost, giving you and the team more time to spend on the dollar productive tasks. With rising costs and slowing revenue, the focus must be on value for money. Check it out, sureagents.com.
Welcome once again to Kevin Brogan from CoreLogic. G'day, Kevin. How are you doing?
Really well, thank you, Kevin. You too?
Fine, thanks, mate. I'm enjoying this, how we're extending this show to look at more than just the auction stats. We'll pull those up in a moment, but also excited to jump into what's happening with new listings, days on market, and so on. So some great stats coming out, and the reports are coming out from CoreLogic on a regular basis. We put them on our website, but also just go to corelogic.com.au and pick them up. Kevin, firstly, let's bring up the final results for the last week, showing a weighted average national of 47.5%. You know, I guess under the circumstances, reasonably good results out of Sydney and Melbourne, Kevin.
Yeah, look, we did see that trend down after the preliminary results, but I think we've reached a phase now where we're looking at a reduced number of auctions because of the coronavirus situation. So the properties that are being listed for auction are sort of fully set up to go down an online route. Still a lot of activity in terms of sales prior to the scheduled auction time, but nonetheless the sort of lower levels of listings are sort of manageable within that sort of new order of things. And the results are reasonably encouraging out of Sydney in particular, but also Canberra has been relatively resilient compared to the other capital cities.
Yes, we're going to have a look at understanding the auction stats in our report on Monday, so make sure you join us for that. That's coming out about lunchtime on Monday. And we're going to look at the impact of COVID and how it relates to withdrawn properties. Some really interesting stats coming out of the report that was released yesterday by CoreLogic, but we'll dig into that on Monday. Kevin, could I just move now before we look at the auctions for the coming week, which we'll do before we end the show. Let's have a look at some of the market trends that came out in that market trends report from CoreLogic yesterday. Firstly, the growth in national dwelling values, we'll bring that slide up now, that slipped to 2.1% in the 3 months to April, down from the recent peak of 4% in December. What do you see there, Kevin?
Well, we see a clear impact from the coronavirus situation, and we're going to talk about the level of transactional activity having dropped in the market. So what we've seen is that the rate of growth in property values has really scaled back as a result of the coronavirus situation. But the market was performing really strongly right up until that issue sort of dominated the news. And what it means is that in some areas, particularly the capital cities, we've seen a very dramatic drop in price increases. Particularly, I mean, Sydney and Melbourne both rely on an influx of migrants to generate housing demand, and of course that has now, that source of demand has now ceased. If you have a look at some of the regional areas, you've seen they've perhaps just been a little bit more resilient because the markets there are perhaps more dictated by the local economy. And perhaps some of the lockdown restrictions in regional areas haven't had such a big impact. So you can see that there's a difference between the impact on regional and capital city areas.
Indeed, that sort of raises another point too. You mentioned there about how well the markets are going prior to COVID. Let's bring up our next graphic, which demonstrates that each of the cap city markets were well into a bit of an upswing before COVID-19, and this graph clearly shows that, Kevin.
Yeah, look, I mean, both Sydney and Melbourne, as you can see on the graph there, well into double-digit percentage growth on an annualized basis, and that I think is one of the reasons that over a relatively short time period, what we've seen is a dramatic slowing of the increase because they were on that upward trajectory when COVID hit. If you have a look at the other capital cities, you can see that there's been an impact as well. But we've mentioned before about Perth and Darwin having suffered a much more extended period of softer market conditions. And Hobart was sort of bucking the trend in 2018 when everyone else was having softer conditions. Hobart was increasing. But we've certainly seen just recently, if you look at those Hobart numbers, that there has been a bit of a weakening in that market, even when the other capital cities were forging ahead. And again, with coronavirus, perhaps less impacted than some of the other capital cities, but nonetheless, it's showing a drop in the growth.
Yeah, it will be interesting to watch that Hobart curve and just see where it does go from there, because it's is certainly the indicator that it's on its way down, but we'll watch that one with interest. Let's bring up our next slide for you. The market tells a great story. If you look at new listings, if you look at listings, transactions, and then settled sales, you can see how the market, you can predict where it is at different levels. So we're going to take it back and we'll have a look at settled sales on this next graphic. That shows that they fell by about 40% over the month of April. Quite significant and quite telling too, Kevin.
Oh, look, absolutely. So we saw in the initial phase of the coronavirus lockdown, there were transactions, if you like, were already in train, contracts signed, but settlement not yet occurred. And that sort of kept the level of settlements up for a while. But clearly the number of transactions in the current conditions has really dropped very dramatically as both vendors and purchasers make a determination to defer property transactions until more certainty enters into the market. And this graphic really does show how settlements have fallen quite significantly. You can see there they've come down below the decade average.
And before settlements, of course, we see sales volumes, and that tells another story. Sales volumes then reflect 1 month later in settlements, and we can see here in this next slide that sales volumes are actually declining significantly. We're down to levels that we hadn't seen since the early 90s, Kevin.
Yeah, look, it's certainly the volume of sales has come right down, and what we've done here is to track it against the Westpac Melbourne Institute Consumer Sentiment Index, and as you can see, the consumer index consumer confidence index has really dropped quite significantly. So the sentiment probably drops sort of more quickly, a little bit more volatile than perhaps the property sales, but you can definitely see the impact on both measures there of the coronavirus situation.
Yeah, and our next two slides demonstrate that even more graphically. The next one is the 28 days ending 30th of May. New listings have fallen to levels lower than the lead into Christmas. Just have a look at that orange line, showing 20,500. And then run it across to Christmas of, the last few years. And you can see we're already at those levels compared to where we should be, Kevin. Quite dramatic.
Yeah, look, absolutely. And if you have a look at that orange line being the 2020 listings, you can see that even at a time in the end of January, beginning of February, right the way through to the beginning of March, it was actually sitting below the previous years. And that was actually fueling the strong price growth and the high clearance rates through that period, because there was demand, but there was actually relatively little supply coming on. So the additional supply that would sort of balance that demand didn't come on. And then, of course, we had coronavirus, and you can see that there was a real flattening off through March. And then as restrictions specifically aimed at real estate take place, and the restrictions on big parts of the economy really start to bite, you then see a very clear pattern of people simply deferring property transactions until there's some more certainty in the market.
Yeah, our next graphic looks once again at listings, but now we're looking at total listings. An interesting story here, I think, because once again we can see how far down it is on previous years at this point in time. But not only that, since the start of the year. But interesting that the drop off is not as rugged as the previous slide. And what that says to me is that properties are staying on the market longer, and we're seeing that, aren't we, with days on market blowing out to 90 days, and now getting more and more properties just simply not selling, sitting on the market.
That's right. So, I mean, properties which have been presented to the market, they may not be actively, being advertised. A vendor would, I imagine, be quite happy to take an offer if it was reasonable. But I would imagine that the vendors are not in a position, or many vendors wouldn't be in a position of being in a distressed situation yet of needing to accept a low offer. So I suspect that what they're doing is they're just leaving the property there, hoping. Now with some good news coming through in the media about how effective some of these social distancing measures and restrictions have been, hoping that perhaps the deferral of a sale or purchasing decision won't be for too long. So look, that has been relatively steady, even though new listings have really dropped.
Yeah, we have to remember too that new listings coming on or not coming onto the market could also be because of the number of buffers that have been put in place with the JobKeeper, and also the way the banks have moved to hold back on some of those mortgage payments. So there's been a lot of pressure taken off the market, and as you rightly said, we're not seeing a big increase in distressed sales as we probably would have expected if it wasn't for those buffers. But it's going to be interesting to watch what happens when all of that finishes, and it will finish, as to what the market does. Kevin, I won't ask you to predict that because that's probably just a bit too hard. But
look, I've got an "it depends" answer already. It does depend on the speed with which the economy and economic activity can recover. So there's obviously a very clear trade-off in terms of social distancing and restrictions are what have put us in the position where we're in a strong position. So any return to economic activity has to maintain that monitoring, social distance or whatever, so that the virus doesn't get a hold for a second run. And if that's successful, then you would hope to see better economic activity, better confidence, and that in turn will flow through to the property market.
Yeah, I've quite often in the past, in those days when I was travelling, was wishing that we could be closer to where other parts of the world, and all that activity. But sometimes the isolation of Australia and being where we are has got some great benefits, and I think we're reaping those rewards right now because we've been very fortunate, I think, in how we've been able to work through this. But full marks to the governments, the way they've handled this, and also to the community and how it's taken on social distancing, as you've said. Kevin, can we just close the show out by having a look at our auctions for the week ahead? Nothing spectacular, but still holding in there.
Look, I mean, I think, as I said, the market has adjusted to the coronavirus restrictions. We've got a situation this coming week where all of those properties listed were listed in full knowledge of the restrictions, so there are relatively few of them. But there has been significant headway made in terms of getting online auction platforms adopted. And of course, this week we're potentially going to see some auctions occur, particularly in New South Wales, with social distancing in place, but actually no longer needing to be online. So be interesting to see how the clearance rate works out, and whether it sort of again has that sort of equilibrium with the number of properties that are offered and the amount of demand that there is in the market.
Yeah, I do want to just make a comment. I'm not going to draw you on this, Kevin, unless you want to make a comment. But there's been a lot of talk about online auctions and how successful they've been. One or two of the groups certainly embraced that, and they've done a great job. Ray White being one of those. But it hasn't had the massive impact I thought it would on the number of auctions coming through. I thought there would have been stronger auction numbers, given that there is that alternative, but it shows how hesitant the public are to even embrace things like online auctions in the masses that we see them with in-room and on-site auctions.
Yeah, look, obviously the online auction methods do require buyers to feel confident enough to bid. And as we saw in one of the earlier slides, with consumer sentiment having fallen so significantly and so quickly, although the technology, I feel, has been embraced by those who've brought their properties to market and those who have bid, a significant portion of the buying public, property buying public, will simply be looking to defer their decision. So you've got that underlying confidence issue, which is going to just hold people back, even if they feel they might buy something relatively quickly once the economy starts to pick up. They may be just holding back now.
Yeah, well said. All right, well, on Monday we'll be back. Kevin Brogan will join me. And as I said, we will have a look at a really good report out from CoreLogic that just looks at the auction results and puts it all into perspective. Some really interesting numbers there, not only with withdrawals, but what's happening right across. So this is pre-sales, sales under the hammer, and properties withdrawn. Some interesting comparisons we'll give you in the show coming up on Monday. Don't miss it. CoreLogic's auction update with Kevin Brogan. Always a pleasure talking to you, my friend. Have a good weekend, and we'll talk to you on Monday. Thanks, Kevin.
And you. Thanks, Kevin.